of making his mark on the industry as a leading software investor. Robert Smith is the founder, chairman, and CEO of Vista Equity Partners. He is with us at Post 9 in a CNBC exclusive, and I can't tell you how happy we are to have you.
Thank you for inviting me. Excited to be here.
Congratulations on this great milestone. I know you have many family members here, and you're going to be on that balcony, which never, ever gets old.
Never gets old. Exciting.
Could you have imagined that Vista would be where it is today, 25 years later, 90 portfolio companies, $100 billion in assets under management, 600-plus transactions, more than $315 billion in transaction value, and annual returns that are just astounding. I think somewhere around more than 30%. I mean, those are incredible numbers.
Thank you, Scott. Yeah, can I imagine? I think so. And I will tell you why. You know, I learned early on in my career as an engineer the power of enterprise software, which is what we focus on. It has been the most productive tool in our business economy over the last 50 years, and likely will be for the next 50. But it will now be powered by artificial intelligence. And so it's an exciting time to be an investor in software, an exciting time to be Vista investing in software.
We'll get into all of that, obviously, which I want to. You've managed through so many different economic cycles.
Right.
And crises that come up and other issues that you have to manage through. How do you assess what's happening right now?
A few things. In our world, you know, software has proven to be not only the most durable, but one of the most resilient in these environments. It has become enterprise software, mission critical, business critical. All industries rely on it. All companies rely on it. And in fact, when you have challenges with labor, you have challenges with trading environments, people lean into software. In fact, during COVID, one of the expressions that occurred where people lost visibility on their supply chains, their customers, even their own employees. And so as a result, they invested in more software, which actually created a pull forward of revenue, which is why we saw that peak in 2021. So the dynamic of enterprise software is still powering really the connectivity in business hasn't changed. What has changed is people are gaining more access to it. You know, people now have the ability to invest in some of these private equity funds in enterprise software that I think is going to actually rebalance the opportunity set and democratize investing.
What do you make of the trade war? Where do you think how's it going to end?
I think there will be a series of bilateral agreements that will bring, again, a new equilibrium environment, which I think is what is sought after at this point by numerous parties.
A balance.
A balance, but it's a new equilibrium. And will be different than what it was, and hopefully it will be more fair for countries that felt that they were being abused in certain dynamics. And I think that will then reignite the markets in a way that will create a roaring opportunity to take advantage of artificial intelligence being introduced into each of these businesses and these industries.
How are you thinking about the kind of time frame? Because you need to think about all that kind of stuff when you're thinking about where you're going to be investing.
Yeah, there is this predictable volatility for a period of time, and I know the Treasury Secretary came out and said it'll be 90-day pause through the administration to actually work on cutting these trade deals. And my guess is there's going to be, in that period of time, I hope, a number of trade deals that now settle the markets, give visibility, give transparency as to how we're going to interact as trade partners throughout the world. I think you'll see certain blocks starting to form and crystallize. But people realize I have the great opportunity to be investing in all over the world. We operate in 180 countries. And you can see the demand and the desire for people to get back to some business as usual and trading with some clarity as to what the agreements are.
I found this interesting article today entitled, "China has an army of robots on its side in the tariff war." The point being is that we're not the only ones who are trying to make this tremendous leap forward.
Right.
How do you think about that?
We've known about this for some time. You know, once we distributed compute, which we have over the last 20 years, for many years, compute resided in a few places. And then once we got the cloud compute, it resided pretty much ubiquitously everywhere. And as a result of that, people could access it, utilize it, and that created a massive opportunity for invention to occur around the planet. And of course, in certain pockets, others outstripped others. So, you know, we've known about this for quite some time. You know, we, of course, continue to rely on our education systems in America, the way that our businesses are organized, and free enterprise. Free enterprise for people like me who grew up as a young lad in Denver, Colorado, the son of school teachers, to build a business based on technology, software, very few places in the world does that occur. And so I think in America, we still have infrastructures and institutions that enable that to happen.
We talk about tech and software probably every day in one form or fashion, just because it's such a popular place for our viewers to be investing. You look at what's happened with technology stocks. Your bread and butter, obviously, is enterprise software. We track it through the IGV, right? The ETF that tracks the space. It's down about 15% or so. Do you think that area has corrected enough?
I think what is happening is there's a major bias right now towards artificial intelligence and artificial intelligence infrastructure. The vast majority of capital is flowing in that direction. And as a result of that, people haven't realized, like in every other cycle, hardware vendors typically get the first wave of the economic rent in technological advancements. The second wave goes to typically infrastructure providers. The third and most profitable wave usually goes to software, and enterprise software in particular. And so there will be a period of time, which, in the downturn, we've now taken 6 companies private. We've also done a number of private company transactions. When these companies become agentic or Gen AI enabled, that you really start to see the benefits of what this new technology and how it will feed software. That's the advantage of being in the private space that we're in today.